Okay, so here we are for basically we're trying to figure out how best to protect our investment portfolios and trade in financial markets over the coming days and weeks, given the enormous events that are going on around the world at the moment. And wherever you look, there is a big economic, fundamental, geopolitical story. But the main driver of today is Nathan Bray, who's really going to sort of cut to the chase, so to speak, and get to the nuts and bolts and whatever other cliche I can think of.
Very true.
And help you out.
I hope you're all doing well. I would like to start off with a disagreement with you, Clifford.
I haven't said anything yet, Nathan.
I feel like these big events are more talk than chalk. I really don't feel like these big geopolitical events, it's like the market is not even reacting in a great deal to it.
Right, well, I think our viewers should know that Nathan is very good at pushing my buttons and winding me up. So yes, I will respond to that. Okay, so I mean, the tragedy of Ukraine is unspeakable. We can't really fully comprehend or describe what's going on over there, but we do know that the interruption to global supply chains, we do know that the actual reduction in supply of energy and agricultural products, or agricultural and energy products available to the global economy over the next 12 months, is significantly reduced. And given all of the responsible investment of recent years, there hasn't been a lot more put into new oil discoveries or oil sources. So the oil industry is it's not as easy as people think to make up for any sort of lost production. But that's just the Ukraine situation. So people have to understand we're not just getting higher commodity prices, we're getting actual scarce supply of commodities. There is an abundance still, but a lower level of abundance, and it is problematic. And I guess then you talk about what happens for the European economy. Europe's going into recession.
Now, putting the Ukraine aside, and you're talking about a supply issue with oil, isn't that what Greta Thunberg's created? And isn't that what we're being told by this new woke community in the world, that is what we're after? Well, so isn't this just
it's too short a show here to go into all of those points, which are all valid and relevant. But, you know, everyone in the world's trying to do their best to make the world a better place.
Right.
And sometimes those efforts can also have side effects that we didn't fully foresee.
Yep. This is the real problem, because what they're trying to do here is hide the problems they've already created, which is inflation, which is money printing. Okay, these are the real problems. These other things are just the sideshow, a bit of the drama. It's like watching the football game and then listening to some commentators talk amazing drama to you. I feel like that's where we are in the global economy.
So,
too hectic? You say, soften this down a bit.
I mean, sanctions are absolutely appropriate, but we should also recognise that there is blowback against sanctions. Yep. Okay. And that is going to hurt the European economy. But the main thing is going to hurt the European economy. We'll speed this up because you're all busy and you need to go on with your day. So let's give you some vital messages.
Go for it.
I'll go first, then you go, Nathan.
Please do.
Okay, so the real takeaways here are that repercussions from sanctions will affect the European economy. The European economy is going into recession largely and mostly because consumer sentiment, the decision that consumers make and business managers make, is going to be far more cautious over the next 12 to 18 months than it's been for the past 10 years, regardless of any other crisis. When you've got war on your doorstep, you tend to stop spending and you tend to sort of save. And if you're a business manager, you tend to just be a little bit careful with cash flow, more so than you were before. And that alone will drive Europe into recession. The United States could have a recession. Everyone's talking 2024 or something. The United States could have a recession by the end of this year, given high levels of inflation eating away at consumer behavior, plus the inflation itself. So I think there is a difficulty there. And with China, I wrote last week that, you know, China will be coming out of its COVID lockdowns. There will be stimulus. What we've seen since I wrote that is that the first deaths from COVID in Shanghai have occurred over the past 24 hours. So the lockdowns could actually stay for longer than we would like. And so far, the government isn't as keen to make it easy for everyone as perhaps the rest of world economists thought it might be. So we're running the risk of triple recession, though it would be short-lived for China. China, United States, Europe. That is not a good thing. We're going to have ongoing war. I do not expect the war in Ukraine to end this year. So that's a lot of conflict ahead of us. I think the real key thing I'd like to make, Nathan, for your clients and everyone, is that what we've seen so far in commodity prices may only just be the beginning.
Yes.
That what we've seen in commodity prices was the first wave, and we're having the second wave correction in Elliott wave terms. We're about to have the third wave, and the third wave's often even bigger than the first, to the upside. So we're seeing congestion of the recent volatility, consolidation of the recent volatility in terms of price action, which is starting to look like at any time commodities like gold, oil, etc. could break higher. My target for oil remains 150, 180 US dollars. That's achievable this year, early next year. My targets for gold remain 2,500 US, 3,500 US over the next 2 years. So,
great points from a technical perspective. We're looking at gold. Its previous 2011 highs are becoming support. So this idea that we're breaking out of this consolidation period and going higher is happening. So I totally agree with you. The causes of it, I feel like from an economic perspective, if we're going to talk about war, let's talk about economic war, right? So in Europe, they don't have any bullets to fire. They are at zero interest rates, negative real interest rates. They are printing money. They are not taking their medicine, and that is causing inflation. And the fact that they have some other pressures now around them, they don't have the economic sense at this point to say, wow, what if something else happened? They haven't prepared. They're not taking their immunity tablets. All right, they are staying in a position where they can't fight inflation without potentially disrupting their economy extremely badly, right? So how do we justify it? Are they now using things like a war in the Ukraine, which is a military operation? All the facts point to that at present, okay? Our media is, again, building something up to justify the actions of central banks who aren't prepared, right, for exactly what you're talking about. And I feel like that's really what's going on globally. And everything you said as far as that will cause, the current situation for oil to rise, for commodities to rise, to gold to rise, 100% agree, Clifford.
Okay, great. All right, I'm a little bit less the conspiracy theory, but
I think inspired.
But central banks have obviously done a very bad job, got it wrong in the US and Australia. A lot of other countries are doing the right thing, like New Zealand, South Korea, Mexico.
Yeah.
But yes, several Western central banks are behind the curve, and they'll cover their mistakes a little bit with the situation in Ukraine. But they do have a difficult road ahead. There's no doubt about that.
Definitely. What about Australia? How come New Zealand now has 10 times the cash rate than Australia does? Is there a problem caused by money printing in Australia, by an overinflated property market? Why aren't we raising interest rates?
Well, we're not raising interest rates because I have thrown it through a few stones at the front doors of the Reserve Bank. No one came out. I think they are all asleep.
Yeah.
I don't know, maybe someone left the gas on. I'm not sure what's happened at the Reserve Bank of Australia. But look, the OECD says the Reserve Bank of Australia has problems. They've recommended an urgent review of the board and the charter. I've been advocating that for quite some time. I think it's probably about the first to suggest the Reserve Bank was not capable or functioning correctly in terms of doing its job and fulfilling its responsibilities to the Australian people. And I think the Australian taxpayer deserves far better. And I also think they should have been raising interest rates slowly from June last year, which is when we first suggested they should. And if they had done that, we would not have a property bubble. We would not have inflation beginning to run away to the upside.
Sure.
And we would not now experience, which what's going to happen now is the Reserve Bank will follow up its first massive error this time around. It's made other errors in the past, but its first massive error this time of not doing anything, having crisis interest rates when there's no crisis. I mean, it's a no-brainer. That's stupid. And then in the second phase, where it's going to create a problem, is going to be when it wakes up. I mean, I don't know, the firemen break down the front door, they get in, provide oxygen, the RBA wakes up, and then they realise, oh no, inflation's out of control, and they start hiking interest rates aggressively, and that will then lead to a bigger crunch and recession risk for the Australian economy in the next 12 months as they raise interest rates too aggressively, too fast, because they're fighting after their first error.
Yep.
And we're going to have inflation and higher interest rates at the same time, which is not a happy outlook for an incoming federal government. Thank you very much for joining us.
Thanks, everybody.
See you.